Good morning and thanks for tuning into the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's a day that is a bit more tempered, I reckon, compared to yesterday's session or some of the other sessions that we've seen in the recent past. But nevertheless, let's figure out what to watch out for and what should we be looking for. So first, the COVID tracker, and I think if we can show that in some fashion, it'll be really nice. So this is this may not show the gravity of the problem, but there is an issue at hand, viewers. Let's face it. Yesterday on Bloomberg.com, there's a story about how across the Atlantic and the Pacific, which is both sides of the US geographies, lockdowns or clampdowns on the virus are coming in. Not necessarily pure lockdowns, but in various shapes and form, restrictive measures are starting to come back. Now, whether this will blow over or whether this will result in something even more dire remains to be seen. But does this put some risk off in place? Maybe in the minds of few investors it would, right? And therefore we have to be wary of that. Not that the US markets reacted as dramatically. Yes, actually we should pull up the US markets, because the Dow, when it started off, was in the green, and then the Dow slipped a little bit in the red. But this is the point that largely I'm trying to make, that it's not that the Dow and the S&P had a big bang downtick. It's just that they had a mild pullback from the highs of the day. The futures also seem to suggest that. So therefore, I don't think there is panic at hand right now. Maybe the market is digesting this well, but we have to be mindful of that there is an issue at hand. Now, some of the technical factors also come into play. A lot of very eminent chartists tell me that the charts tell the story slightly before what the markets eventually do, and the reasons may be anything. Now, viewers, remember about last week or the week before last, a number of times we brought out these charts about how some of the technical indicators suggest that if an X number of stocks are above the 200-day moving average, then usually the market tended to correct a bit. Now, the Nasdaq is surely showing signs of that. It is failing to maintain the 12,000 mark after the rise in the breadth measure. The breadth measure is below, as you can see, the share of the members above the 200-day moving average. And that happened. And since then, the Nasdaq has been pulling back. Now, the same holds true for a couple of other indices as well. And we have to be mindful of that. Now, I'm not a technical expert, so I can't predict really what will happen. But there is an issue at hand right now. And it is now to the fore if indeed US is clamping down so severely. And we already know what the state in Europe is. Then let's wait and watch. India, by the way, is slightly better on that front. But let's see if the post-holiday numbers look slightly dire. But having said that, let's look at the Asian markets and the SGX. And I think they indicate a bit of a tempered start. So you probably have a flattish to a mildly lower start for most of the Asian indices. The SGX Nifty, the last time I checked on the website, seemed to suggest that we'll have a start which is 1/3% lower in trade. But it could have changed a little bit. I checked it about 10 minutes ago. At that point of time, the website sgxnifty.org indicated about a downtick of about 1/3%, now indicating flattish start, maybe just marginally pulling back. So let's wait and watch how it shapes up. But we'll have a tempered start. Essentially, the long and short of it is that we'll have a tempered start. Now, therefore, how is the trade looking like? Now, this is my understanding really. One, I think the difference between the COVID-induced pressures this time around versus the last time is that we have the vaccine news, and that might help. And even if the West is cooling off, India is actually doing very well. So if you just look at how India has been scooting ahead, we had a great day in trade almost every single time, while even the Western markets were cooling off a little bit. So Indian markets have scooted ahead. The Midcap index is now trading at 52-week highs. So the breadth also is improving. Now, it's difficult to call for the downside, but it's very important to remember the global correlation. Like I said, we've scooted ahead, even if global markets were a bit tempered in the last few days. But we are joined to the hip with the global markets. And if they start cooling off, then please don't make any bones about or have any illusions about India outperforming. It may outperform for a day, 2 days, 3 days. Eventually fall it will. But this is presuming the global markets come off. For now, they are not showing some signs of that. So that's a positive. And the FI flows, they are really good. November has seen inflows of over $500 million. That's just quite stunning. I mean, the last 5 days as well, in yesterday's session too, if you just look at the numbers, they've just been robust. I have left out the Murat trading session numbers because they were too tiny. But just look at the last 5 days per se, and you see numbers which are very, very, very robust. 4,900 crores in trade yesterday. And even if you account for some of these flows to be on account of bulk deals, yesterday there's a small deal that Capital and Amansa had in Tanla, for example. But even if you discount all of that, I think the overall flows picture looks very impressive. 38,000 crores in the first half of sorts in November is nothing to scoff at. So we have to be mindful of that. And typically this means that banking will continue to do well. BFSI is right up there in terms of performers, and maybe that will continue. So the HDFC banks, ICICI banks, they are doing okay for the time being. The sentiment is right good about the financials. What about specific stocks to focus on in the session today? There are a couple of very interesting brokerage notes, but I want to start off with the newsmakers. And today, I'll start off with one, what the focus should be on the global lineage stock, right? So we have to watch out for the Tata Motors, the Motherson Sumis, the Bharat Forges of the world. All of these are globally linked. And if there is a belief that there might be some pressures on the global scenario because of COVID-19, could these be under pressure? I don't know. They're looking very strong. All of these. Tata Motors was up 5% in trade. It's touted to be one undervalued auto stock. So I'm not saying these stocks will correct, but if you have positions here, you have to be mindful, and you've got to keep one keen eye about what's happening on the virus situation and lockdown situation around the world. In Motherson Sumi's case, what's happening in Europe becomes very, very important. So please be mindful of that. So that is part one. Then some newsmakers in the session yesterday, and one of them is Tanla Platforms. The erstwhile Tanla Solutions, they changed the name to Tanla Platforms. And while people may scoff at it, the fact remains that the stock has jumped from 37 nearly a year back to 410 or something like that. Now, yesterday was interesting because right at 9:15, there was a bulk deal that happened. And the promoter, Mobile Texol, acquired about 1.27. Okay, this is the chart. So very interesting chart. And as you can see, it's a 10x stock in whatever, less than a year or thereabouts. But yeah, let's get back to the acquirers. The promoter, Mobile Texol, acquired about 1.26% stake. But this is important. Amansa, Akash Prakash, acquired 40 lakh shares, which is nearly 3% stake. American Funds Insurance acquired 6.34% stake. So the names that are coming into Tanla Platforms are really impressive. And let's wait and watch what happens to the stock. It was locked on an upper circuit yesterday. The names are impressive. Let's see if it does an encore today. So that is part one. What else? There are a couple of other mid-cap newsmakers that all of us should keep an eye out for. So let's get the stocks rolling. You have to watch out for IIFL Securities. The company said that they will consider a share buyback on November 20th, which is 2 days from now. So you have to watch out for that stock too. Now, viewers, LVB is the other case in point. The news is, of course, that there is a moratorium. RBI has limited the deposit withdrawals to 25,000. It will be merged with DBS Bank India. Now, two things. If you are a deposit holder, then your money is safe. Don't worry. But if you're an equity shareholder, that value is completely eroded. So to my mind, I think there's zero value for the stock. We've done stories on this on our website, so I urge you to go and read about it. But even if you're not a shareholder, if you've seen this stock today at 15 rupees, and if you see the stock at any point of time go down to maybe 7, 8, 5, 4, 3, don't be a hero and try and buy it unless some news emerges, because unless something dramatically changes, which I doubt it will, the stock value for this one is zero. So don't go out and buy it. That's my humble request. Of course, monitor it. If things change, you could sure do, but on current measures, don't go out and buy Lakshmi Vilas Bank. The other two things, couple of mid caps and one large cap. So first, the mid caps, the ones which had some very interesting delivery volumes, and amongst them, Chalet Hotels, Indiabulls Real Estate. Oh no, this is a wrong stack. Let's just pull this out. Stocks like Chalet Hotels and IIFL Finance, etc., were the ones which had some very impressive delivery volumes. So those are the ones that you should be focusing on. Chalet Hotels in particular, watch out. 49% delivery volumes. The stock was up 8%. So we'll be mindful of that. Last but not the least, we should watch out for Bajaj Finance. The BOFA report on the stock seems very impressive. They've revised the target price to 5,050. They believe that the management focus is to get back to pre-COVID growth rates by March 2021. The transformation plan is a priority to facilitate higher velocity and lower cost. and they raised the earnings estimates by 4 to 5%, and stage 2 growth from 8 to 8.5% from 8%. The stock has rallied quite a bit, but the growth in the recent festive season has been better than expectations, and that should augur well for Bajaj Finance. So watch out for this one. Financials anyways are in flavor. This one would be no different. But trade safe. Coronavirus cases are rising across, so be mindful of that. Thanks so much for tuning in to the Trade Setup.